In today's video, we'll talk about the continued rise in the US dollar. Is the US stock market finally going to take a little bit of a break? And silver crosses $50 an ounce for the first time in history. But with such a big round number, our precious metals, gold sitting at 4,000, silver at 50, are we likely to see a bit of a pullback? Let's talk about it. Some breaking news and some positive news, fingers crossed, let's hope. Israel and Hamas agreed to the first phase of Gaza's ceasefire plan. They've agreed to the first phase of a US brokered ceasefire plan that will allow for the release of all hostages in Gaza, Israeli withdrawal to an agreed point, and the release of some Palestinian prisoners. The ceasefire in Gaza will take effect immediately following the Israeli government's approval of the deal, which is expected later today, according to Israeli officials. This is posted on CNN's website. And when will the government shutdown end? Well, bettors on Polymarket are making some interesting plays. And no, this is not a Polymarket sponsored part of the video, trust me. But instead, I'm looking at the betting markets because people tend to vote the most confidently with their money. And when it comes to betting, it can actually be a really interesting way to gauge sentiment on something. So what we see here is the odds are pretty heavily stacked towards an October 15th or later government shutdown. So essentially the odds are pretty high that you're still going to see this thing drag out for a little bit longer. And of course, part of the reason gold and silver have been going up so much is probably because of the two geopolitical events that we just got done discussing. The war in the Middle East, and of course, the situation with the government shutdown. And so possibly if we do see some resolution on both of those things, could those be short-term catalysts for a pullback in gold and silver? Maybe, but to be completely fair, gold and silver, even on this day, that you get the kind of ceasefire and the announcements, we still see silver rocketing higher, even despite the headline. But let's take a closer look at the full year seasonality, specifically of gold. And if you've not used seasonality before, it's a very incredible tool, a very simple, repeatable thing that occurs in markets. Now, it's not a perfect indicator, as nothing is, but it can generally give you an idea of what the historical path of an asset throughout the course of the year is. And what we can see is gold has followed suit very, very evenly this year, essentially following the standard trajectory of gold during a year. Now, granted, proportional wise, the magnitude here, the performance this year has been incredible. We're up, 40+% or so in gold. Now, I had some questions about this. The right-hand side is the historical percentage gains, not this year's percentage gains. However, let's take a look at how the rest of the year typically goes for gold. We can isolate this, and maybe James, you can help us zoom in a little bit here, just this segment. Essentially what we see here is through the months of October, November, and December, we typically see gold prices go sideways to slightly lower. So perhaps just from a seasonal basis, if we're going to continue to follow the pattern this year, we get a little bit of a consolidation phase or even a pullback. While we're on the topic, here's a look at the S&P 500, which if we're looking just at historically speaking, what happens, we tend to see a rally through the end of the year. And here's a look at silver. Similar to gold, we would likely be expecting some sort of rocky or consolidation phase to end out. This is based on 10-year average historical performance, and it is a tool within the Edge Finder. If you have the Edge Finder, just navigate to seasonality. Under seasonality, just look for annual seasonality, and you can select whichever chart you want. We have currency pairs, commodities, stock indices, etc. While we're on the topic of seasonality, we can also take a look at some currencies. Here's the dollar versus the Swiss franc, which historically rises in the second half of the year, so we'll see if that takes place. Here's a look at the Australian dollar versus US dollar, which tends to trend lower in the end of the year. And here's a look at dollar CAD, which historically has a really strong end of year period. Now you may be saying all of this stuff is pretty cool, but seasonality is just one indicator. Wouldn't it be nice to use this in combination with many other features? Well, that is essentially what the Edge Finder is built to do. The Edge Finder looks at a collection of sentiment indicators like the commitment of traders data, technical data, which is seasonality and trend momentum, and economic data to build a bias that looks at a wide range of data to help us build a better trade plan. It does this for all of our favorite symbols, everything from NASDAQ to gold to pound yen. All of it is in this platform, and we've spent the last few years building this. And right now, I want to tell you about how you can win a copy of this for free. How would you like to win a free copy of the Edge Finder? Well, this month we are giving away not one, not two, but 3 free copies of the Edge Finder to 3 lucky winners. That means if you join, there's a 3 times chance that you are going to be the winner of a free copy of the Edgefinder, which is usually a $1,400 product. With the tools offered by Edgefinder, you can track institutional positioning through the commitment of traders data or the put to call ratio to study what crowd sentiment is currently like on your favorite charts and assets. Or if you're interested in tracking macroeconomic data and how it could potentially impact things like gold, silver, commodities, currencies, and indices, check out our US Economic Heatmap. This table allows you to see all of the major economic readings that things like the Federal Reserve are watching to set monetary policy, and these things drive trends dramatically. Or check out our Economic Surprise Meter, which shows which currencies are stronger than others based on the economic data being released. And you can tie it all up with the top setups page that we offer within the Edgefinder, which scans all of this data and generates bullish and bearish readings for your favorite symbols. So now that you know how awesome the Edgefinder is and that we're giving some away for free, how do you join? Step 1 is to join our Telegram channel. We'll drop a link down below, or if you scan the QR code that you see on your screen right now, that'll take you over to the Telegram channel. That's step 1, pretty easy. Step 2 is to make sure you enter the giveaway using the form being shared in the Telegram channel. Simply fill out this form, takes about 1 minute, and your name is in the hat for a chance to win. And there is no step 3. Step 3 is, I guess, simply just wait to see if you're the winner. There's no harm in joining, so best of luck to you, and remember, 3 people will be winning, so make sure to throw your name in for a chance to win. Just to recap, step 1, join the Telegram. Step 2, drop your name in the form that can be found in the Telegram, and you're good to go. Now let's get back to trading. So speaking of the top setups page, what you'll notice is that we have some dollar bullishness in here. Dollar CAD, dollar Swiss, and New Zealand dollar getting a bullish reading here for the dollar, with NZD getting a bearish reading, USD getting a bullish one. And if you've been following along with the channel recently, then you know I am already long the US dollar through the ETF UUP. I took specifically dollar yen long inside of our VIP group, and have also kept my exposure open to UUP, which is a ETF that tracks the dollar index. So they're not exactly one-to-one, but in the US, my options for trading the dollar, I could trade this on an FX account, or if I just want to buy the basket like DXY, I can't trade DXY, but I can trade UUP. And if you want the brokers that I use, I'll leave them all linked in the description down below this video. But dollar index looks really strong here, guys. And again, we've been saying this in the videos here recently, that the Fed day bottoming out was incredibly confusing and the market played gotcha. It is only confusing, however, if you don't actually track the macro, because the macro tells an interesting story. When we went into the Fed meeting, everyone was like, hey, we're going to cut rates, and rest of the year, Fed's going to cut, and, they're going to, whip out the scissors and really just snap away at interest rates, which they are still expected to do. Then why is the dollar going up? Let's break it down. So now that we've broken it down, let's break it down. The US dollar is strong because it's stronger than the rest of its peers. Let me explain what I mean by that. Is the US economy in a perfect condition? No, but inflation is sticky, which puts upside risk to the dollar in the sense that the Fed may be able to cut interest rates a few times, but how much they cut from here is limited by inflation. If inflation continues to rise, the Fed has a dual mandate where they don't want inflation to get out of control, but they also don't want the jobs market to fall apart. And we're sort of flying in the blind when it comes to jobs data because of the government shutdown. But we do know that inflation is still sticky and that the labor market could use some help. So what do? You probably cut timidly, whereas other places might be facing a harder time with their economy and may actually need to ease or cut interest rates or weaken their currency further. Take, for example, the New Zealand Economic Heatmap, and we can see the New Zealand score here is very low. Or just take a look at Canada. I mean, this is a good example of a country where their currency, in my opinion, should remain bearish for the time being. What we can see here is that they're at 1.9% inflation rate, the CPI year over year. What does that mean? There's room to cut interest rates. And not only is there room to cut interest rates because inflation's cool, their unemployment rate's at 7.1%, which came in higher than expected last month. So the path of least resistance for the Canadian dollar here, based on our report card, should be lower, and that has been the case the last few weeks. Whereas when we look at the US dollar, on a relative basis, the dollar can be strong. The problem that most currency traders run into is they think that the dollar has to be weak because the Fed's cutting interest rates. But by doing that, you are fundamentally missing the point of currencies. Currencies are valued relative to other currencies. It's a race. The winner is not necessarily the one who has a perfect scorecard versus the one that has a terrible scorecard, but rather the one that simply reaches the finish line faster is the winner of the race. It doesn't mean they're lightning fast, right? Like, it's just like if your car is just barely rolling through the finish line before your opponents who, went up in flames, you still won the race. I don't know if that was the best analogy, but the point is the dollar looks relatively strong compared to its peers. And I have been bullish on this one. I went long UUP around here, went long dollar yen around that time. And let's just take a look at dollar yen. The reason I took my dollar yen trade off too early, by the way, I should say, I went long here and here, closed out around here, which was far too early. But the reason I took it off was because, again, I think that there is upside to dollar yen, but limited from here. I think there's some Bank of Japan intervention that may go on. They don't want their currency to be too weak relative to the dollar. And so, yen weakness, I think, is limited to an extent. If we take a look at JXY specifically, you can see this thing has been in just a free fall here since the new prime minister, who actually came out and said something on this. Specifically, Japan's finance minister warns against forex volatility as the yen weakens, citing, "We will thoroughly and monitor for excessive fluctuations and disorderly movements in the foreign exchange market."
Well, I've been doing my back testing. I've been trading for a while. I'm finally qualified to get a payout. Let's do it.
All right, move over, you bag of bones. I've been funded with Maven for a little while, and it's time to request a payout. Watch this. If you're looking to get funded, check out Maven Funding down below in the description. With our promo code, as you see on the screen right now, you can get an additional discount off of any of their challenges, and they offer some of the fastest payouts in the industry. Not only do they offer really fast payouts, they also have some of the best prices in the industry by far. So if you're looking to get funded, check out Maven down below in the description. Stocks are slightly lower here today, though again, this is hard to call anything of a pullback. I mean, however, in recent days, this is all we get in terms of sell-offs or pullbacks. The stock market has been so hot here with so much enthusiasm around AI and exciting new announcements. I mean, I know I mentioned this in yesterday's video, but just look at AMD. It took out the highs. I mean, this is just showing the strength of this AI trade. I mean, NVIDIA reaching a new high, up 2.62%. And it's an interesting thing because, again, you have AI stocks just vastly outperforming. Just taking a look at some of the stock market world stuff, you have Oracle up 3% here today, NVIDIA up significantly today as well. If we take a look at the semiconductors ETF SMH, this thing is running to the upside as well. And again, very hard to call the top on this. Momentum favors the bulls. I think that if you do get pullbacks in the stock market, I think that there's dip buyers waiting. So I am one of those dip buyers, to be frank. If we get a pullback to the 38.2% retracement, I am a bull on the stock market, and I am looking for that opportunity to join the trade with a good risk to reward platform surrounding it. So if I'm looking at Dow Jones, NASDAQ, Bitcoin, S&P 500, Russell, these things are all getting bullish readings within the edge finder at this time. So if we get a pullback, I'm eyeing up the Dow Jones and the NASDAQ for pullbacks. And a reminder that these strong scores indicate that sentiment, technical data, and economic data are mostly aligned in favor of the underlying symbol. Does that guarantee price moves higher? No. But what it does is it helps me build a more insightful trade plan around this idea that I have. I already like the technicals on the Dow Jones, the NASDAQ. I'm just waiting for pullbacks to see if I can get involved. Another one that's back on the radar here with a score of +5 is US oil, getting a bullish rating, and economic data looking okay here with some growth metrics coming out of the US that look solid. Sentiment data, maybe some institutional accumulation on the COT reports. But long story short here, I do think oil has room to expand higher. I do think that it is not really a problem to the market at current levels. Low inflation is helped by low oil prices. I would, however, caution that if you do get a significant breakout in oil prices, that truly could cause the stock market to roll over. The reason I say that is because if you do get a significant breakout in oil prices, that rises the price of everything else. It rises the pump for the consumer, right, which hurts the consumer spending, but it also impacts the prices of goods that make it to the stores, right? Because everything that gets transported, there is an involvement there in the energy cost that it takes to get it there. So rising trucking and airplanes and ship costs due to rising oil prices can be disruptive, but currently not a problem. Right now, we still see oil prices muted, but I would watch for any sort of breakout above the 66 range. By the way, I should clarify that US oil getting a +5 score is bullish, but I would prefer to go for something that has a higher score. I actually heard this recently from one of our Edgefinder users who comes on the content frequently. Forex James mentioned that he likes to wait for scores get a little bit above 5 just because it sort of has more resiliency. And I'm curious, if you're an Edgefinder user, comment down below. Do you tend to do this too? Like, do you favor a higher score as well? We have traders all over the world using the Edgefinder, and I'm always curious to hear what you guys do with it. In fact, when I listen to people talk about the Edgefinder who use it in their videos and their content, etc., it's always interesting to me to hear their spin on it and how to hear they use the tools and indicators that we've built. So I'm always curious. Drop your comments down below if you have a particular thing that you look for within Edgefinder. Of course, another thing people do is sometimes they'll look at just the top setup's economic readings, or for example, take a look at just the top setup's sentiment readings, which isolates the scoring just for things like commitment of traders data, retail sentiment, put to call ratio, AAII investor sentiment survey, etc. Speaking of which, let's take a look at some market sentiment right now, as I think we're all curious to know. First of all, we can take a look at the put to call ratio, which shows something really interesting. The put to call ratio measures the puts relative to calls options volume on the selected symbol. In this case, we're looking at SPX calls and puts options. And what we see here is the stock market continues to roar higher. Yet, as we look at the data here, we see October 8th, the most latest available data, we see huge surges in call demand. So traders are out there buying calls. They're making big bets that the stock market rally is going to continue. And the reason I bring this up is because we use this as a contrarian indicator. When everybody gets really bullish, we take the other side of that. When everybody gets really bearish, we take the other side of that. So I'm not necessarily looking to use this as my sole indicator to short the market, but I do think that it is worth mentioning that when the put to call ratio gets a little bit extreme, maybe it's time to cool the jets a bit. That's at least how I use the tool. And while we're on the indicator, I think it's worth taking a look at gold as well. I've selected gold. You obviously can see gold price action continuing to rise. And we also see a very high call demand for gold that we haven't seen in a little while. Notice that even in this rally, we've had sharp demand for puts. Well, that has since evaporated. And now everyone is piling into long call positions, it seems, when we look at gold. What about silver? Silver's not so extreme, but still showing a little bit more preference towards calls. And just a reminder, you can join the giveaway if you are interested in getting a copy of the Edgefinder for free. We are going to be giving away 3 free copies. Make sure to join the Telegram channel using the link in the description down below. Here's a look at the AAII Investor Sentiment Survey. This is specifically interesting for those who watch the stock market. If you're somebody watching the stock market, what you'll notice here is the latest data shows an increased surge in bullishness amongst the retail or general crowd. We also see bearishness declining. And we've actually broken this down with our tool. If we scroll down here, you can see bullish sentiment over time is on the rise, bearish sentiment is on decline. Now this can go on further, so I'm not saying this is the top by any means. It could continue to bolster more bullishness out there, but bearishness seems to be on the decline. And what I typically use this for is a contrarian indicator when things get very, very extreme. So if market sentiment starts to get too bullish, then I would take that as a point to really cool the jets on, getting long risky stuff, and rather maybe wait for pullbacks. That's how I personally would use this indicator. Another one is the Bitcoin to gold ratio, showing a outperformance suddenly for Bitcoin over gold. Remember that when this chart is rising, that shows strength is in favor of Bitcoin. And when this chart is in decline, it shows strength is in favor of gold. And we take that as a risk on versus risk off gauge on this channel. We frequently talk about the Bitcoin to gold ratio, which is now showing again some sustainable favoritism towards crypto over metals. And that is coming at a time in which gold has been skyrocketing. So perhaps this is a signal that risk on sentiment is just very strong right now. Speaking of Bitcoin, Bitcoin tried to get above this. Well, it did hit a fresh all-time high around 126,000, has come back and tried to test this area, found some sell pressure in this area though. I wouldn't be surprised if Bitcoin is coming back down to test this 117 level, which I've mentioned in previous videos might actually being a buy opportunity for me. If I pull up my top setups page here, Bitcoin getting a +7 reading, I am interested in a pullback here. Drawing a Fibonacci retracement from the swing low here to the swing high, we get a really interesting level showing up at the 50% retracement zone. If I take this trade, I'll share it inside of our Discord channel, which if you're not a member of, if you'd like to become a VIP member, you can see every trade that I'm taking in down to the minute. Whenever I take it, I share it right away inside of the Discord server. So if that's something you're interested, you can explore that offer down below in the description and become a VIP member. And if you want to explore more about the VIP group, you can also just scan the QR code that you see on your screen. On this page, you can go through some of the trade examples. You can see my track record and the details about what the service entails. You get access to my trade alerts as well as a few other of my trading companions in our service. So check it out if you're interested in exploring. And the key thing I'll say about this is that I know signal services can sometimes be kind of considered grimy or sketchy. It's sort of like a sports pick person who claims they have the results, but what we do a little bit differently, and what I think is important and we pride ourselves on, is we actually show verified track records that we actually trade and have had consistency in markets. So if you're serious about trading, would like to work with a group of people that are equally serious about markets, then consider joining us by scanning the QR code that you see on the screen right now. And just to give you a visual example, this is what our service looks like. Anytime I take a trade, we share full context and details behind why the trade was taken, like this oil trade that didn't work out, or the silver trade that I ended up closing out here recently. Every trade that I take gets shared with full context, details, and explanations. If this would be beneficial to you, then I invite you to join me inside of the VIP group. And if you do join in the chat room, say hello and we'll welcome you. We've got a couple new members that have joined us this week, and maybe you're the next one. Thanks for watching. Have a great rest of your day. Hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.